Good morning, everybody. Welcome to our Trading a Smaller Account. I'm Connie Hill. I'm happy that you have joined me here today. I am sitting in for Barbara Armstrong as she recovers from her knee surgery, but we understand she's doing pretty well. So happy that you've joined me. Just a quick hello to some of you early greeters here. Dom, Jack, Jackson, Lola, Ron, Andrew, Rachel, R.E., Bill. Happy that you've joined me here today. We also have Brent Moores in the chat. Brent's here to help me out, maybe field some questions I can't quite get to. But as you have those questions, let us know. Brent, great friend, fellow coach for many, many years. He knows the markets inside and out. In fact, he'll be having a class in 2 hours from now about advanced option strategies that we may not necessarily cover in this class. Now, I have a question for you. How many of you are quick to embrace change or something new? How many of you are quick to do that? Well, I'm going to share something with you. I am going to show you a picture on my phone of my new cat, George. I'm going to try to move this so that you can see it good. Let me see. Hope you're seeing that okay. You see that? That is a new to me cat. His name is George. I just made that up the other day. Anyway, I was really expecting George, but he is something of a little bit of a change, and I've decided just to embrace the poor cat that needed a new home. Well, today we're going to talk about embracing maybe some new technologies, keeping track of those companies that are emerging that people are starting to embrace. All right, let's go through our disclosures, and I will start down on our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only. Do not consider it a recommendation of any sort. We will be using the Paper Money software application. It is for educational purposes. I think it's a fantastic tool to try out different strategies or different rules that you're working on. Past performance is no guarantee of future results. All right, just make you aware of some upcoming workshops, Chicago, Washington, Dallas. If you can get yourselves there, you will love it and appreciate it. We treat you like gold and it's free. All you have to do is show up. We even give you a notepad and some pens to take notes on, all right? So it's a great opportunity for you to be fed a lot all at once and meet with like-minded people. All right. Now in our class, we have a few things that we like to do. Typically, we'll look at what the market's doing overall. Always want to be doing some new trades and follow up on some of our existing trades that have been happening. So in our class, we assume we have a $20,000 paper money account, which, you know, for you, maybe $20,000 is a lot. Maybe for somebody else, it's a little bit. It's just this idea that we don't have this huge chunk of change we're working with. We're working with a smaller group of money. And so we have to be a little bit more thoughtful about some of the trades that we want to get into, because sometimes it's not possible for us to do certain strategies. We'll put a maximum of $5,000 into any position. We're willing to risk $400 to $500. We're going to focus on shorter time frames or intermediate time frames for those positions. We're going to trade both bullish and bearish. Doesn't matter which direction, whatever the market's doing, we are going to participate in it. Okay, when we're bullish, we may look at any one of these strategies, buying the stock, buying a long call, writing cover calls, which we've talked about in the past. Any of those strategies are fair game. All right. When the market's bearish, and we haven't had a lot of that right now while the market's making new highs, but when there are bearish conditions, we'll look at long puts, long put verticals, and short call verticals, and sometimes we'll get into iron condors and calendars, just depending on what we encounter. All right, so let's dive into it. Let's head on over. We'll do our market posture first, and then we're going to look at some new type opportunities. Now, I've got the S&P on the screen. Wow, today another new all-time high. Just keeps grinding higher and higher. This blue is a 10-period moving average. The red is a 30-period moving average. So that's the intermediate line. Man, this market and the NASDAQ as well is just following along that 10-period moving average. The ADX, which I have on the screen, we might consult with from time to time. gives us an idea that it's a 30 right now, and anything 25 or higher means this trend is strong. Gets up there to 35, 40, 45, then it's a very strong trend. So right now, it's doing better than just strong, right? Up there to 30, and our relative strength line is showing really some continued bullishness. Looks like it's maybe flattening right now, right there at that 70 line, but could there be some weakness creeping in? Well, maybe. We would expect this RSI to go a little bit higher than where the previous peak was, than the previous peak. We'd expect it to be getting a little higher if the price is going higher. So I'm going to say there's a slight divergence there, but nothing to, be incredibly concerned about, right? We're really paying attention to price action. If we see a divergence, then the price needs to confirm it. We just don't jump to conclusions. Oh no, the market's going to be weak. We just don't know. NDX set another high today. Can you guys believe this? Just keeps churning and churning. We're pretty good market conditions, right? Reports coming in, unemployment reports. I didn't listen to them this morning, but just generally speaking, we've had a strong economy. We've had strong employment. We have had lower unemployment. So yeah, things are perking along. And on the RSI here, we can see, oh, look, with this new high, it did get a little bit higher than what these previous peaks were on the RSI. So no divergence there. And this ADX line looks like it's about 27. So it's above 25, letting us know we are trending fairly strong. Now, Chris says, how big should our trading portfolio be before we have to adapt different roles on what we do with a smaller account? Ooh, that's a tricky question, Chris. It may be different for different people. I'm going to say, if you're working with, say, a $5,000 or a $10,000 account, that you may have to, I'm going to say, adjust a little bit on position sizing. Meaning you probably aren't going to be able to have 5 positions out there if you've got a $5,000 account. I mean, maybe you can. Actually, you maybe could do that, right? But it's just that as your account grows, then maybe your position size can grow a little bit. Maybe the types of stocks and trades that you look at, you can change a little bit. Right now, really high price stocks, although having some good price activity, aren't necessarily cheap options. They're more expensive options. So we kind of have to focus a lot on using spreads. So I'm going to say it could be something that just kind of grows a little bit as opposed to flipping a switch. Here's your small account rules. Here's your big account rules. The rules are going to be pretty much the same. It's just that you might have more opportunities for different types of strategies when your capital is a little bit more than maybe what it is in your smaller account. So I hope that helps with that particular question. All right. Well, let's just take a quick look at the VIX. What do you expect with the VIX? It's just staying down in lower areas, right? Lower territory. It's not the lowest it can go, but it certainly is lower ranges. So we're not feeling skittishness in the market. We're not seeing a lot of put protection going on. There could be instances of it, but just not overall, or people getting all concerned. All right. That's the landscape that we're going to work from here today. Now, I talked to you a little bit about embracing new technology. There's a lot of new technology out there that maybe you might not want to be the first in line to do, but maybe you would. Okay, start embracing these things. One thing that I am thinking about right now, let's start out with this particular stock. I'm going to pull it up here. HSAI. Now, this is a Chinese stock. You have to be aware of that. Right here in the name of the stock, it says ADR. And so we know that, okay, this is a foreign stock. I just looked at it. I know it's Chinese, okay. And on this, it's kind of like Heisei Group. You're like, it's not like Dell or Micron or Microsoft. You're like, I don't know what that is. Come over here to the Analyze tab. Select on those fundamentals, and you can read about the company. It's in the consumer discretionary area. And it says they engage in the development, manufacture, and sale of three-dimensional light detection and range solutions. Geez, that sounds kind of new, okay? And then you get down here a little bit further in the description of what they do. Looks like they do some things with what's called driver assistance systems, autonomous vehicles. Whoa, okay, is that new technology? Yeah. Are you going to be the first one to jump in line and take that autonomous ride in your city when it comes there? Maybe, maybe not. I was talking to a friend earlier this week, and they were down in the Phoenix area, and they had a driverless car take them from one point to wherever the next point was that they needed to go. She said, at first I was scared, and then I was like, hey, this is pretty cool. Yeah, this is, to her, seemed very safe, and she had her husband with her and their 5 kids. So she was okay with it. So they were, kind of embracing this technology. So sometimes there may be companies that we're just not as familiar with, but they're out there and they're moving along. You can see today already it's traded over 2 million shares as far as the stock goes. And look at the open interest. We look down the call options. There's lots of liquidity here, lots of open interest. So yeah, there's contracts out there trading, which we love to see as a trader. Usually that means the bid-ask spread will be a little bit more narrow. This one has I'm going to collapse this for a second. Notice how high the implied volatility is here. 91%, 93%. One's expired today at 336%, I guess. In any case, they're pricey options. And sometimes when the options themselves are a little bit pricey, sometimes you don't get like a nickel spread on it or a 10-cent spread, which we might expect in a low price stock that's like $20. And so this one, I'm going to say, is a little bit wider, but wasn't out of consideration as I was looking at it. Now, on this particular chart, what I was looking at is maybe doing what we call a short put. Sell some premium with the intent of creating some cash flow on a stock that we wouldn't mind buying. Technically here, this one's kind of interesting. I'm going to zoom in here. It has what we call an ascending triangle formation, where the low points get a little bit higher, and it bounces off this diagonal area, and then it has a flat top. It's got some resistance up there. It looks like maybe 24-ish and change. And so it's kind of staying in that range. And the first entry some people like on an ascending triangle is if it breaks above resistance right here. The second point of interest is if after that breakout, maybe the stock comes back and retests what that resistance area is as an area of support and bounces off. Sometimes people use that as an entry. Sometimes, this is not as common, an entry that some might use is this bounce off the diagonal support. And people might do that if they think maybe it's going to stay above that point. Maybe they're not so concerned it doesn't have to get up here to resistance, but have enough, let there be some distance there that it can go, right? You're saying, okay, yeah, there's still room for this stock to move up here, $2 and some odd cents here. When I was drawing it out earlier here, I'll show you what I was looking at. Let's get my arrow back here. I just grabbed the diagonal line here. And I was like, okay, from say, actually, I'm going to start over here. This is kind of the second point in the triangle. How big of a move might we expect after it breaks up? The height of the triangle is about 6 points. And on a $20 stock, that's a lot. Percentage-wise, that's saying about 34%. That's a huge move, okay? The move from where it is right now to this area is about 13%. Is that still pretty decent? Yeah, that's still some range. So what we're looking to do here is selling one put at the 20 strike price. What that means is we're willing to have the stock put to us at $20. Okay. Right now it's sitting at 21 and some change. So that would be at a little bit of a discount, right? $1.23, at least right at this second. That's what the price of the stock would be. Plus, we got to keep the premium that we collect right now. All right, so it's saying it's going for 125 by 145. We've got a 35 delta here. So it's out of the money. The 1750 is like way out of the money and probably isn't as realistic. Okay, so we're going to do our one contract because we can absorb. If we are put the stock, we can absorb 100 shares of stock at a $20 price tag. We could, if we wanted to, we could even do a couple of contracts here. For our purposes today, I'll just keep it at 1 because we want some variety in our portfolio. So let's go ahead. If the stock were put to us at $20, well, what would that mean? Well, if we collect $1.25, some people like to figure that into their net debit. They're like, well, it's kind of like getting the stock at $18.75 and not $20, right? You're getting it at a little bit of a discount because you already collected a credit that you could use for that. Now, it's a 20-cent spread, which I'm not excited about, but let's try to get a midpoint price on here. Let's see if we can get this at a 135, which will be the midpoint area, looks like. There we go, 135. We're going to see if we can get filled here. If we don't get filled, I'll come back and adjust it. Maybe I have to drop it to 130. Okay, but that'd be nice to get the stock at a discount if that happens, or it's nice to just pocket the money. We've got 28 days, which means time decay is kind of in its rapid mode, right? The last 30 days of an option's life is when it really starts to expire quite rapidly. Okay, so we'll run with it. We'll see what happens here. I don't know how many of you sell a lot of puts, and it might not be something you do a lot in your smaller account because it ties up some capital. We're going to have to pay, we're going to have our account tied up a little bit. They're going to tie up some money for doing this trade. And so it's showing here our buying power effect. Buying power effect is going to go down by $307.60. Okay, so want you to just kind of be aware of that. And we'll see if we can get filled at 135. All right, we're going to send this off. And I forgot to put it in our smaller account bucket, but I will do that. Okay. Next up, let's take a look at another stock. What other technologies come to mind to you that are like, I don't know if I've embraced that yet or want to embrace that yet or not? There could be some things, right? I'm going to bring up one that is something that I'll tell you, this stock keeps coming up on my early morning mover scan. CLSK, Clean Spark. Clean Spark, man, that sounds like a little bit of, I was going to say spark plugs to me, but that's not the case. These guys do Bitcoin mining. Okay. You might be somebody that's like, I don't know so much about this Bitcoin, but guess what? I don't think it's going anywhere. I think it's going to be here to stay. Now, I liked the entry it had when I looked at it earlier. I do not like it as well for the trade I had considered. Let's come over to the option chain. I think if we're going to do something here, stock's at 12 bucks. One, I liked initially here, it looked like it was bouncing off our 10-day. I don't like that entry so much right now. But if we were to sell like a put spread and say, hey, we would like the stock to say above $12, that gives us a little bit of leeway. That wasn't my initial inclination to do on this stock. Look at this open interest, you guys. Okay, little Clean Sparky here. Thousands of open interest contracts. There are people that are, you know, trading this entity. And I think it's, if I pull up, let me see here on the fundamentals. I want to see what year. Oh, this is the one that didn't have it. Let's see here. Okay, they're in Henderson, Nevada. Okay, they're operating these data centers to Bitcoin or to mine Bitcoin. Okay, so cleanspark.com, if you wanted to find out a little bit more about them, great. You could go over to their website. Let's come back here to their chart. Let's actually just come over here to the option chain. We're going to look at the August options. There's lots of trading activity here. We're going to go, let's go here. Let's see what this would look like. If we sold the 12 and bought the 11 doing a short put vertical, you can see there's tons of open interest and super narrow, 41 cents by 44 cents. In a smaller account, it's nice to be able to have a smaller price stock that has single strike increments. Sometimes it's not easy to work with. This particular one, I think we're finding some that we can work with, okay? And so let's just go ahead. We're going to say sell vertical. And we're going to keep it at that $1 wide. Now, what would our next step be here? If we bring it up, we see what the credit is. Next step would be to say, is that a big enough credit to make, the juice worth the squeeze that we have here, right? To make it worthwhile for us. So if we say our max theoretical gain here can be 0.24, we divide that by its max theoretical loss of let me clear that out again. 0.24 divided by what? 0.76? It's about a 31% return. Okay, so for things that we do in our class, that's fine. That's acceptable. Knowing that the risk there is 70, I'm gonna lock this in here, 76 cents. How many contracts could we do? Okay, we can risk up to $500. So let's divide that by 76. And we could do 6 contracts here. Now, that might be suitable for your account. You might have to do smaller contracts for your account, just kind of depending on what you're doing. I'm going to just point out maybe kind of a downside on something like this is that it can take a while to build up your account if you're only trying to get $24 at a time. Okay, but is it still possible? Yeah, absolutely. If the entry were a little bit better here, quite honestly, I probably would have gone for a long vertical, gone for a 12-13. Because the entry isn't quite as nice, that's why I'm gonna settle for this 24-cent credit, because we can do a short put vertical trade if it's bullish or if it's going a little bit sideways here. And today it's kind of doing this little pullback here, but it's still above the 10-day moving average. All right, let's go ahead. Let's do our 6 contracts. And let's put an order to buy it back if it goes down to peanuts. Okay, what are peanuts? Well, we're going to say peanuts are a few pennies. So let's create an opposite order. And let's see if we can buy it back, say if it's 4 cents. Okay, making it mostly worthwhile, but not waiting to bleed every little last penny out of it. All right, let's make this good till canceled. Let's send this on its way. And we'll make sure to put it in our trading a smaller account grouping here. All right. Lalit says CLSK is getting acquired. Check the news on this company. Are they? That's why some of the buzz has been continuing with it. I didn't see that in the news that I looked through, but I might not have gone back far enough to see really what was going on there. So appreciate that. Yeah, we love to see that. Okay, next up. This is a newer stock. This might not be on your radar so much. It's a little stock called Circle. It's only been trading for a few days here. Okay, really has only been trading a few days. Here is their IPO date, which was June 5th. So it's been around, maybe 5 to 6 weeks. Okay. Finally has a 10-period moving average. Let's see how much has moved. Okay. Let's try to maybe get close to the closing price the opening day. And man, this was a sharp run up there to 298. Actually, I'm going to need to drop this direction, and I need to maybe adjust this so we can see the calculating box. Like, that move is atrocious. 281% in 12 days. Okay, this thing is very, very volatile. Okay, it's going to be volatile going up, could be volatile coming back as well. See, this is 281%, which is like amazingly scary, right? And then let's say from here down to the low. Let's see what that volatility looked like. Okay, that's down 41%. Okay, so that is a significant move in 5 bars, right? That's like being on the roller coaster that is like the wildest roller coaster in the park, and you're holding on for dear life because it is so volatile. But there may be some of you that are interested in something like this. Now it's a $229 stock, so it's not like we can buy the stock or very many shares of the stock if we wanted to pursue it. I think that's a little bit intriguing here about it is the ADX is finally able to calculate on it. And the ADX is the average directional index. It gives us an idea of if the trend, whether it's bullish or bearish, is strong or if it's weak. Right now, it's got a reading of about 47, and anything above 25 is high. So anything, maybe say 35, 45, 50, that's in a range that's very strong. Okay, 25 is strong, above 25 is going to be very strong. Okay, so let's take a look here. Mighty says it's difficult to do spreads if it's wide. Yeah, it is. So you do have to watch out for that. Probability trader says today is a red day. Maybe the market's pulling back a little bit right now. Looks like it as I glance over at my other screen where I see the indices. Yeah, it looks like now it's a little bit on the selling side. That's true. That could I could factor in here. Now on this particular one, this is what I was eyeing to do. We'll see if it still makes sense or if we need to make some adjustments here. I was looking to do the 245, 250. Things have moved significantly. I was looking to do a long call vertical here. It isn't as high as it was. You're right. Things are just really pulling back. Honestly, I don't like that entry there as well. I liked it earlier when it was above yesterday's high. I'm not liking it so much now. So we could do one of two things. One, we could say, let's watch it, see if we find maybe something that's a better entry point. Okay. Wasn't aware that the market was going to sell off so strongly on us. I was going with the idea that it was going to keep running the direction that it had been running. Okay. So maybe not liking that so much. Because that's the case, we might need to opt for a strategy that's selling premium. Would have to do it as a spread because these strike premiums are just so expensive here. If we were to come out here to say, because implied volatility is huge. Okay, that means options are expensive, they're pricey. That means they're juicy when you're selling those premiums, right? What if we came out here even to say, let's just look at the 195, 190, okay? And say we want to sell the vertical. That's a pretty juicy premium of $1.85. And it has a 64% chance of expiring out of the money. It's at a 25 delta. We might even be able to go further out of the money here and still give us a big leeway. All right, let's do a blast all here. And let me maybe step it back a little bit. Let's go 185, 180. We'll just see here. Sell the vertical. It's got $1.30. Okay, $1.30, and it has a 71% chance of expiring out of the money. And we get a credit of $1.35, and we need it to stay above 185. How much leeway does it have right now? Well, we've got about 27 bucks here plus 15. We're looking at what, $42 of room ish. Okay, let's come down here to where the 185 is and see where it I kind of stretch this a little bit, maybe move this down a little bit so we're seeing those candles a little bit better. We don't need to give volume as much room here, maybe. All right, 185. If I were going to draw my line at 185, it would be in the neighborhood. I'm going to get it as close as I can. Okay, that's pretty close. Okay, here's 185.26. So it's close. It's in that area. We would want the stock to stay there. Okay, is it going to? Well, obviously we don't know. Some traders on put verticals don't mind getting in at support. Okay, and like I said, this entry is not as good as what I had originally hoped that it would be. So we'll go with a safer strategy. We're just going to do one contract. Okay, we're going to do one contract, and let's go with the one that gives us a higher probability and still a pretty decent return, right? Right now, it looks like it's at 140. So let me just kind of lock that one in. And if we say it's a $5 wide spread, so 140, that's going to be fairly similar to our first one. Divide that by what? 360. 360 would mean the max theoretical loss. We would be risking more to make our $1.40. Gives us about a 38% return. Okay, so that's at a 19 delta. So when you see lots of volatility, when like the price action that we were seeing, then yeah, those options are going to be pretty pricey. If this has a technical breakdown, we might consider getting out of it. Okay, we might consider saying, price maybe not working out, but we're going to go ahead. We'll do our one contract. We will. I'm going to have to get rid of this order. Let's see if the second one stays. Okay, good. This one stays. Let's see if that's still. Oh my goodness. Credit's getting even better here. That's not necessarily good. Let's go further out of the money, okay? Let's go, instead of 185, let's sell 180. And I'm saying that because the values are going up. Oh, I guess that's not good enough. Okay, never mind. We'll go with our 160. Let's go ahead. Let's send that in. We're going to watch it very closely, okay? It is more speculative for because it's a smaller stock. It hasn't been trading all that long, but it has a lot of firepower. What does Circle do? Do you guys know what Circle does? Circle provides infrastructure for stable coin and blockchain technology. Okay, what does that mean? Basically, it's in the cryptocurrency space. Okay, and this stock has had a little bit of buzz about it. We'll see how this might work out for us. All right. Yeah, Blastall, I put up a Blastall because it allows you to kind of stack up various orders, and you can send them in all at once and just go blast, go fill everything. Or, well, basically, when you're sending them in at the same time, they're not contingent on each other. Okay, one can get filled and maybe the next one doesn't, in the sense that they don't have to all execute in order to be valid, is what I mean by that. Okay, the one could get executed, one couldn't. I mean, it treats it like a regular order, regular limit order, market order, whatever it is that you send in. It's just the idea they're not dependent on each other. Okay, very good. Yeah, probability trader said it issues stable coin. Yeah, so it's definitely in that arena. Some people are starting to embrace. And as traders, we want to be aware of where these companies are that are moving really well. Maybe you don't necessarily want to venture into that land, but you can kind of see the momentum on where it's going, and you're going to identify the stock, do your technical analysis, do your homework, know what they're about, know if they're volatile. There might be some of you that are like, I don't feel really comfortable with that volatility at all. You might just say, no way, not going there. Okay. All right. How many of you have not yet become subscribers to our Trader Talk channel? Do we have anybody out there that just, hasn't done it? There could be some of you out there, and that's okay. We still love you. But if you become a subscriber, it really makes it really easy for you to find our content. Okay. So here's our Trader Talks channel. Under this home tab, you can see what's coming up next. When I first pulled this up, it was before our class started, so we've got our class there. Coming up next is going to be Cameron May. Will be teaching advanced charting techniques, after which Brent Morse, who's in the chat with us right now, will be teaching advanced option strategies. Okay, we do not cover a lot of advanced option strategies in this class. But Brent does a fabulous job of going through some of these multi-leg strategies that are a little bit, they take a little bit more to conceptualize, and they're a little bit more involved than some of the strategies that we use in here. Okay, so you can find our content easier. You can go to playlists. One thing I've just been letting people know about is we're doing a couple of things. We're doing some bite-sized content. I've got some videos out here. Barb has some videos out here. She's spotlighting some candlestick patterns, and I'm spotlighting different functionality with Thinkorswim, like little thing that you're like, oh yeah, I want to know how to build my own toolbar. How do I do that? Oh yeah, I don't want my graphics on my charts to always be black. How do I colorize them? How can I change them and personalize them? Okay, so just little videos that show you how to do that kind of a thing. So when you're a subscriber, it just makes it easier for you to find that type of thing. So that's why I'm going to encourage you to do so. All right, let's head back to the paper money. We're going to take a quick look at a couple of our positions, but I'm hoping we have time to come back to do one more trade. So far, we've put on 3, and I don't know, this other one might not look so good anymore either. We'll see, but let's look at what we have going on because it's important to talk about managing these trades. It's good to say, hey, let's identify possibly our best entry and the conditions and what we're looking for. But if we just leave you hanging on the rest of it, that might not be so helpful, as opposed to saying, okay, what's reality? What is it looking like? What do we need to do? And with the pullback in the market, I'm going to imagine that we have some things that might need to be kind of see what's going on here. All right, let's see what BP is here. Open up British Petroleum. It's got 63 days. We bought a long option dated out in September. We did this as a swing trade. We put this trade on last Friday. Okay. And we were looking for this to obviously move up because it's a call option. We didn't want to restrict it really tight, though, in terms of time. Okay. Right now it's down a little bit. We bought it for 163 and now it's worth 122. Let's go see if there's been a reason we might need to get out. Okay, let's pull up our BP here. Now on British Petroleum, I draw some little diagrams in there so I can know, what were we thinking about this trade? And I didn't put my little oval on it yet on the 11th, which was right here. This is when we got in last week. We were seeing it break above this horizontal resistance area in this triangle. We measured the height of the triangle to see, well, where might it possibly go? And we were looking for it to get up to here. If it falls below the support line here, we want to get out. So it hasn't fallen below support, but it hasn't moved in the direction of our target. And so here's another rule that some might want to think about. If the stock hasn't moved half the time in half the period of time that you expected it to, that might be a reason to get out of the trade. Now, we thought this may take it about 3 weeks, 2 weeks, really thinking possibly 2 weeks, but it could draw out to 3. But just the idea that we're not planning to be in it for a very long period of time. How much of our premium has eroded here? Let's just do a quick calculation. We got in at 163. Let's plug that in. So we have 163 minus current value of 1.24. So it's down about 39 cents on us. Let's take our 39 cents and divide that by our initial price, $1.63. Let's see how much we're down percentage-wise. We're down about 23%, almost 24%. So it's down to an area that we're like, we're not happy about it. It's not at a 50% range. At a 50% range, many times traders will say, enough. It's not doing what I thought it was going to do. That's it. Okay. It's not quite there yet. So we're going to give it a couple more days. It's a pullback day in the market. What should we expect from our positions? Yeah, we're going to expect that they are pulling back. Okay, so not really a big surprise, but it's still above our support line. Let's see how our day ends up. See if it next Monday, Tuesday, if it makes some moves the right direction, then great. We'll probably give it some patience. If it doesn't, and that time decay is really wearing on us, we're going to get out of the trade. Okay, because we just can't afford to basically sit around while it does nothing. We can't. That's one of the real detriments of a long call all by its own, not in a vertical, is you don't have that hedge leg with it. Okay, so very good. Let's take a look at another one here. So that's our BP. And also, it looks like our XYZ is up about 21%. This one's up, WDC. These are both verticals. We're going to let them work. Let's see what Dash is. Dash is down $62 here, although it's up today. So we had a long call vertical on Dash. Still got 28 days to work its magic, make its move. We are short the 250 call on this, so we need the stock to get up there. Looks like right now it's about 238. Okay, so we're down a little on the position. We paid 490 for it. It's at 420, but today it's actually moving in our favor. Let's go take a look at Dash, see what its chart looks like. And let's maybe zoom in here. Now, Dash, we did on the 7th. So we did this 2 Mondays ago. All right, so it hasn't been quite 2 weeks, but it has been 2 Mondays. As we look at this, it was bouncing off its 10-period moving average, and it had been doing that. It had moved along really nicely. If this were only a long call, we'd probably have to pull the plug on it. We'd probably have to say, it's just not working the way we need it to. But because we sold that 250 strike price, we have a little leeway. It gives us some buffer to give the trade a little bit more time to actually do what we think it's going to do. Okay. Now, has it made a lower low? It looks like there was a low here. Maybe the previous low was maybe down around here. So it hasn't made a lower low. So it's still in an uptrend. And we can see right before we got in, it had that 248 high. Okay. This one, we're going to be patient with. We're going to allow it to just work. Okay. We're going to do one last trade quickly here, unless it looks dorky or if it just doesn't look so good. But actually, this still is looking pretty good here. Vistra Corp. Vistra does some retail renewable energy. Is that kind of a hot topic? Is that kind of something that's new technology that is being embraced? Yeah, it really is. It's one that's been coming up frequently in my early morning mover scan because look how nicely is like pulling back to the 10-day moving average. Now, right here, it pulled back to the 30. That's just an intermediate moving average. We could look at this and say, man, today it's doing a close above the high of the low day, although we're not closed yet in the market. So when this would say it's making a move above the high of the low day, and it looks like our low day was actually here. That's where it went the longest. This high is 192.44. Now this got as high as 195.12. So it's moved higher than the high of the low day. Looks like this one's actually hanging in here pretty decent. Let's take a quick look over at its options. We're going to use these April or August options here. And let's see if this still looks reasonable. Looking to do 180, 175 put spread. So 180, 175. I'm just going to pop this up. We're going to sell that vertical. It's given us $1.62 now. So that's going to give us a return probably in the 30-something range, 30+%. Does that meet our parameters? Yeah, that does. Now, the risk here is going to be what, 358 on this one. So we could do 358. We could do one contract. Okay, that's all we can do is just one contract. That's fine. Not a big deal. First trigger sequential. Let's create an opposite order when we've got a chunk of the $1.62. And let's go ahead and multiply that by 0.3 and say if we get 70%, we're going to be happy campers. Let's put this order. So Thinkorswim platform will go buy it back. Not 480. Sorry about that. 0.48. There we go. And let's make that good till canceled. All right. What does it need to do? We need it to move, okay? We need it to go beyond 180, or rather stay above 180. Right now it's at 192. Okay, so yeah, 192 right there. All right, we're going to send this in. We're going to put it into our category of our class. We're going to see how it goes. Of the 4 trades that we looked at today, I would say that one has probably the most bullish entry signals on it. The other ones were starting to fade as the market was pulling back. And so we kind of had to opt for maybe a more conservative type strategy where we're giving stock the room to move because it's kind of pulling back to support as opposed to bouncing off of support. All right, you guys, Monday, we'll see if anything happened with these trades or the other trades on Monday. We'll keep track of them as we regroup for our class. Now, I did not see any surveys out there today, which is you're off the hook for that. But if you found this helpful, go ahead and like on the way out, as well as follow Brent and I on X. Would love to see you there. And be a subscriber so you can find our content really easily. All right, guys. Now, coming up will be Cameron May right at the top of the hour with the advanced charting techniques. So we'll see you back here in just a few minutes. Have a good day. Bye-bye.